Hey everyone, Apple just reported its latest earnings, and while they beat expectations, there's still some major challenges ahead. iPhone sales are dropping, especially in China, but Apple's services division is stronger than ever. So, what does this mean for investors? In this video, we'll break down Apple's key financial results, what's driving these trends, and whether Apple is still a strong investment. If you want to stay ahead of market trends, don't forget to like, subscribe, and hit the notification bell. Now, let's dive in. Let's start with the numbers. Apple reported earnings per share of $2.40, slightly beating Wall Street's expectations of $2.35. Revenue for the quarter came in at 124.3 billion, which was just ahead of the 124.1 billion analysts were expecting. While these numbers showed that Apple remains a financial powerhouse, they weren't necessarily a blowout. The biggest highlight of this report was Apple's gross margin, which reached an incredible 46.9%. This is the highest on record, surpassing last year's high of 46.6%. What this means is that Apple is making more profit per dollar of sales than ever before, which is a great sign for long term profitability. But despite these strong financials, there was a notable weakness in Apple's core product category, the iPhone. One of the biggest red flags in Apple's report was the decline in iPhone sales, which fell on a year over year basis. This was especially true in China, where sales dropped by 11.1%. This is significant because China is one of Apple's most important markets, and the competition there is only becoming more intense. Chinese brands, particularly Huawei, have gained significant market share. Their latest smartphone, the Mate 60 Pro, is being seen as a serious competitor to the iPhone. With growing national pride in homegrown brands, Apple is facing increasing challenges in maintaining its dominance in this region. Tim Cook addressed this decline and pointed to three key factors that impacted Apple's performance in China. First, he noted that half of the sales decline was due to a change in channel inventory, meaning that Apple adjusted how many devices were being shipped to retailers rather than an actual drop in consumer demand. Second, Apple Intelligence, the company's AI driven software, is currently only available in a handful of English speaking countries, meaning that Chinese consumers do not yet have access to these new features. Cook stated that Apple plans to roll out support for additional languages in April, including a version of Apple Intelligence in simplified Chinese, which could help boost future sales. Lastly, the Chinese government issued a national smartphone subsidy after the quarter ended, meaning that Apple's results didn't benefit from it yet. However, this subsidy could provide some relief in the coming months for Apple. iPhone sales were definitely disappointing. Apple's services division continued to outperform expectations. This segment, which includes revenue from the App Store, iCloud, Apple Music, Apple TV Plus, Apple Care, advertising, and licensing agreements, generated $23.1 billion in revenue this quarter. That's a 14% increase from the same period last year. More importantly, this part of the business is becoming increasingly profitable. One of the biggest highlights from this report is that Apple now has over 1 billion paid subscriptions across its platforms. This includes direct subscriptions to Apple services like Apple TV Plus and iCloud, as well as third party app subscriptions that are processed through the App Store. Services are a crucial part of Apple's long term growth strategy because they generate recurring revenue, unlike hardware sales, which fluctuate from quarter to quarter. Additionally, services have much higher margins than hardware, meaning that as this segment continues to grow, Apple's overall profitability will likely improve even further. This success in services helped offset some of the weakness in iPhone sales. It also reassured investors that Apple is not just dependent on hardware and is successfully transitioning into a more diversified business model. The question now is whether Apple can maintain this momentum, especially as competition in the AI space heats up. Looking ahead, Apple has reassured investors with its guidance for the next quarter, expecting revenue growth in the low to mid single digits. This growth is especially significant given the challenges in iPhone sales and increasing competition. As Apple continues its transition toward AI driven services, its ability to navigate these changes will be crucial for future success. A key aspect of Apple's strategy is its strong focus on maintaining high margins. With a record high gross margin of 46.9%, the company has demonstrated its ability to stay profitable even if hardware sales fluctuate. This strong financial performance provides a solid foundation for sustaining earnings growth, reassuring investors for Apple's long term prospects. Apple is also making significant strides with its Apple Intelligence and broader AI strategy. The company is expanding its language support, including simplified Chinese, to boost iPhone sales in China. Additionally, the rollout of AI driven features and investment in augmented reality particularly with its Vision Pro headset, signals Apple's commitment to diversifying its offerings. If executed successfully, these innovations could create new revenue streams that extend beyond traditional hardware sales. Although there are risks, including regulatory challenges and rising competition, Apple's guidance and strategic investments suggest that it is well positioned to maintain growth. The company's focus on AI, product diversification, and its proven ability to manage margins will be key to sustaining its market leadership and profitability in the competitive tech landscape. Overall, this earnings report was a mix of positive and negative news. On one hand, Apple's record breaking profitability and strong services growth were major highlights. On the other hand, declining iPhone sales, particularly in China, raised some concerns. So, what do you think? Is Apple still a strong investment or are there bigger risks ahead? Let me know in the comments. If you found this breakdown helpful, please be sure to like this video, subscribe to the channel, and hit the notification bell so you don't miss future updates. Thanks for watching, and I'll see you in the next one.